Something absolutely massive just happened in the world of finance and almost nobody is talking about it yet. We're talking about a game-changing partnership that could completely redefine how we think about money banking, the dollar itself. On September 10th, 2025, whispers turned into reality as sources confirmed a groundbreaking collaboration. This isn't just another crypto project making a small deal. We are looking at a monumental alliance between Pi Network, major Chinese state-owned banks, Western Union Central Bank, digital currency initiatives. This is the kind of news that happens once in a generation. You are here at the very beginning, before it hits the mainstream media in a massive way. Think about the implications for a moment. One of the world's largest social cryptocurrency projects, with millions of users joining forces with the financial backbone of a global superpower. Then, add in the most recognized name in international money transfers, over 150 years of moving money across borders. To top it off, institutions designing the future of government-backed digital money. This isn't just a partnership, it's the creation of a new financial superhighway. The walls between traditional finance and digital currency aren't just cracking, they're being torn down. The scale of this is hard to overstate. This announcement bridges that gap in the most dramatic way possible. The future isn't crypto versus banks, it's crypto and banks working together. To truly grasp the magnitude of this news, we need to look at each player involved. This isn't just a random assortment of companies, this is a strategically assembled dream team. First up, you have the Pi Network, a grassroots digital currency movement, quietly grown to over 50 million active users worldwide. A cryptocurrency you can mine on your phone without draining your battery, designed to be accessible to everyday people, not just tech experts. Its strength is a massive, globally distributed user base. It represents the people's side of digital money. Next, the titans of traditional finance, major Chinese banks. Think Industrial and Commercial Bank of China, state-owned behemoths representing massive financial might. They bring legitimacy, they bring infrastructure, they bring a direct link to a market of over 1 billion people. When banks of this size move, it's not an experiment. It's a calculated decision with huge geopolitical and economic implications. Then, Western Union. For generations, people went to Western Union to send money abroad, physical presence in nearly every corner of the globe, hundreds of thousands of agent locations, expertise navigating complex international regulations, trusted last-mile service, turned digital transfers into physical cash and vice versa, accessible to those without a bank account. Finally, the CBDC banks. Central banks building central bank digital currencies, digital dollar, digital euro, digital yuan, government-backed digital currencies are the future, more efficient, transparent, programmable. So how does this all work together in practice? Let's walk through it step by step, because the process is brilliantly simple. Imagine you live in the United States and want to send $200 to your family in the Philippines. In the old world, you would go to a money transfer service, pay a hefty fee of maybe $15 or more, and your family would have to wait several hours or even days. The exchange rate you get would also likely be unfavorable, meaning even more money is lost. It's a slow, expensive, and inefficient process that has remained largely unchanged for decades. Now let's look at the new way with this partnership. Step 1. User with smartphone. Step 2. App converts dollars to Pi. Step 3. Pi coin travels on a global network. Step 4. Pi is converted to local currency. Step 5. Recipient receives money. You open a digital wallet app on your phone, co-developed by these partners. This app is linked to your Pi account and your traditional bank account. You decide to send $200. The app instantly connects to a network that includes Chinese banks and CBDC platforms. Your $200 is converted into Pi coins at a stable, agreed-upon value. These Pi coins are then sent across the Pi network's blockchain almost instantly, for a transaction fee of almost zero. The entire digital journey from the US to the Philippines takes less than a minute. Once the Pi coins arrive in your family member's digital wallet in the Philippines, they have two choices. They can either keep the funds as Pi coins or cash them out. To cash out, they simply open the app, select Withdraw to Cash, and the app generates a QR code. They can then walk into any of the thousands of participating Western Union locations in the Philippines, show the QR code, and receive the full equivalent in Philippine pesos. This entire process bypasses the slow and expensive legacy systems. It uses the Pi network as a high-speed, low-cost bridge for value transfer. Now for this whole system to work, there's a critical element we need to discuss: the price of the Pi coin. For years, Pi has been in what's called an enclosed mainnet, which means it couldn't be traded on external exchanges. Its value has been purely theoretical up until now. But this partnership changes everything, and it all hinges on a concept known as GCV, Global Consensus Value. This term has circulated in the Pi community for a long time, representing a shared belief about what the coin should be worth. It's a community-driven price target, a social agreement on value before markets decide. The GCV isn't just a random hope, it's meant to be high enough to make Pi a useful unit of account for big global transactions. The most discussed GCV has been an astonishing $314,159 per Pi. That sounds shockingly high, but it's rooted in the constant Pi, 3.14159, and serves as an aspirational goal. If millions of users and merchants agree to transact at this value, it can become a self-fulfilling prophecy, establishing a stable, predictable price from day one. This is why partnerships with major banks matter. For GCV to hold, it needs more than community belief. It needs institutional support and liquidity. Agreeing to use Pi as a bridge currency, Chinese banks and CBDC partners validate the need for a stable, agreed-upon value. They might not pick the full $314,159 right away, but they'll negotiate a formal, stable price for Pi within the joint network. This institutional GCV becomes the conversion price for fiat to from Pi in cross-border transfers. That effectively anchors Pi's price. It prevents the wild volatility that plagues crypto like Bitcoin. For sending money, you need stability. That's the holy grail. Real-world utility backed by a stable price driven by a massive user base. The community's dream of GCV is becoming a corporate and banking reality. So, what does this all mean for the average person, beyond just sending money? The implications are profound and will likely change how we interact with financial services forever. The first and most immediate change is the convergence of all your financial tools into one simple interface. Imagine an app on your phone that is your bank account, your crypto wallet, your international payment platform. You would no longer need separate apps for your bank, PayPal, Western Union, your crypto investments. This partnership paves the way for a super app that seamlessly integrates all these functions. Let's say you get paid in a CBDC, a digital dollar, directly into your wallet by your employer. With a single swipe, you could instantly convert a portion of it into Pi to pay for goods and services. With another swipe, you could send another portion to your traditional bank account to pay your mortgage. Or you could convert it to Bitcoin or another cryptocurrency if you want to invest. This partnership breaks down the walls between different forms of money, making your finances completely fluid and interoperable. For millions of people around the world who are unbanked or underbanked, this change is even more revolutionary. There are nearly 2 billion adults who do not have a bank account, often because they lack required documentation. However, many of these same people own a simple smartphone. The Pi network was designed for them. This partnership gives them a direct on-ramp to the global economy. They can receive digital payments, save money securely in their Pi wallet, cash out funds at a local Western Union agent without ever needing a traditional bank account. It's a fundamental democratization of finance, putting powerful tools directly into the hands of people who have been excluded from the system for far too long. Let's focus specifically on the global remittance market because that's where the most immediate and dramatic impact will be felt. Every year, migrant workers send over $600 billion back to their families. According to the World Bank, the average cost of sending money is over 6%. That means more than $36 billion is lost to fees every single year. This is money that could be used for food, education, healthcare, but instead, it goes to intermediary banks and money transfer companies. Traditional international transfers are slow and costly because your money has to pass through multiple intermediary banks, called correspondent banks, each taking a cut along the way. It's like sending a package that has to be passed through several different courier services before it reaches its destination. The Pi network acts as a direct single rail. By converting money to Pi and sending it over the blockchain, you bypass all those intermediaries. The only fees are the near-zero Pi network transaction fee and a small transparent service fee at the cash-out point. This means the cost of sending money internationally could plummet from an average of 6% down to less than 1%. On a $200 transfer, that's the difference between paying $12 and paying less than $2. For a family that relies on these remittances, that extra $10 is a significant amount of money. Over the course of a year, it could add up to hundreds of dollars in savings. Furthermore, the speed is revolutionary. Instead of waiting days for a transfer to clear, the digital part of the transaction is completed in seconds. The recipient can have cash in their hand in a matter of minutes, which is critical during emergencies. This efficiency will force the entire remittance industry to adapt or become obsolete. Companies that have relied on high fees and slow systems will have to either join this new model or risk losing customers. This is the power of disruptive technology when paired with institutional scale. It creates a new standard that forces market-wide transformation. The benefits of this partnership extend far beyond just cheaper money transfers. We are looking at a ripple effect that could transform multiple industries. One of the biggest areas of change will be in e-commerce and international trade. For small and medium-sized businesses, selling products to customers in other countries has always been a major headache. They have to deal with currency conversion fees, high credit card processing fees, the risk of chargebacks. Imagine a small business in Italy that sells handmade leather goods, artisan at work, a customer in Japan browsing on their phone. Customer pays using a Pi-enabled mobile wallet. The transaction would be settled almost instantly, with minimal fees. The Italian business owner receives their payment quickly and securely, without worrying about international payment processing complexities. This opens up the global market to millions of small entrepreneurs, allowing them to compete with large multinational corporations. Another major benefit is enhanced security and transparency. Blockchain technology creates an immutable ledger of all transactions. This means that every movement of money is recorded in a way that cannot be altered or tampered with. This provides an incredible level of transparency, which can help reduce fraud and corruption. For governments and regulators, having transactions on a transparent ledger while protecting user privacy makes it easier to track illicit flows and ensure compliance. This partnership also accelerates the adoption of digital currencies on a global scale. By providing a clear, useful, and easy-to-use application, it moves cryptocurrencies from a speculative asset to a practical daily tool. When people see that they can use Pi to save real money on fees or receive payments for their business, the abstract concept becomes concrete and valuable. This will encourage more people to learn about and use digital currencies, leading to a virtuous cycle of adoption. As more users join, the network becomes more valuable, attracting more businesses and partners, which in turn provides more utility for users. It fosters a truly global, peer-to-peer marketplace, where small entrepreneurs can compete on a level playing field with multinational corporations. What we are witnessing today, on September 11, 2025, is nothing short of the beginning of a new era in finance. Pi Network, Chinese banking giants, Western Union, CBDC initiatives. This is not just an incremental improvement. It is a fundamental paradigm shift. It is the moment where the promise of blockchain technology to create a more open, efficient, accessible financial system finally meets the scale, trust, and infrastructure of traditional banking. This is the bridge that connects the old world of money with the new. For years, we've been told that the future of money would be digital, but the path has been unclear. This partnership provides a clear, practical roadmap. It shows that the future is not a battle between decentralized crypto and centralized banks, but a powerful synthesis of the two. It leverages the grassroots community of Pi, the stability of state-backed banks, the global reach of Western Union, and the forward-looking vision of central banks. It's a holistic solution to a global problem. The journey ahead will still have its challenges. Regulatory hurdles will need to be navigated, and widespread public education will be essential. But the foundation has been laid. The most powerful players from both worlds have come to the table and agreed on a path forward. For the millions of Pi pioneers who have been tapping a button on their phone for years, this is the ultimate validation of their faith and patience. For everyone else, it is an invitation to participate in a financial system that is being rebuilt to be faster, fairer, and more inclusive for everyone. The future of banking is not in a physical building. The future of money is not a piece of paper. The future is decentralized, global, and interconnected that puts financial power directly into the hands of the individual. This partnership is the engine that will drive that future forward. It changes how we send money, how we do business, and how we think about value itself. A new dawn for digital money and global banking has arrived, and it is powered by the people for the people. This changes everything.